you're putting the squeeze in the COMEX, and that's what we want to do, is drain the COMEX. Hi, this is Mike Maloney, and I'm joined once again by Jeff Clark and Adam Taggart. Jeff, what have you got for us today?
Hi, Mike. Yes, we got lots of interesting things on the menu here today. So, Adam, thanks also for joining us.
Thanks again for having me, guys. Love being here.
All our regular segments, plus a great meme of the day, so stick around for that. So we're going to jump right in here. And this first thing is our article of the day, and this is from Craig Hemke, and it's an article titled "A Time to Fight Back." And so the question here, is there another silver squeeze perhaps coming on? And he's talking about on May 1st, he wants everyone to buy silver on that day, which happens to be a weekend, but that's what the gist of the article is about. So Mike, what do you think? Maybe another silver squeeze coming?
Well, I hope so. One of the things that I read was saying, when you've got somebody on the ropes, that's not the time to back off and let them recover in a fight. And they're treating this as a fight, trying to end the manipulation by the commodities exchange and the big bullion banks. And they came close to doing it. And there's lots of evidence that the LBMA, the London Bullion Market Association, and that the squeeze that happened back in February came close to sort of breaking things. And so this is a concerted effort to try and get 100,000 people to buy 100 ounces of physical silver. And that's not very much, just 100 ounces. You can get 100,000 people to do that. And they're trying to get it to all happen on May 1st. Now, May 1st is a Saturday. But the week leading up to that, that's a good time for everybody to pile in and buy, maybe. I don't know. What I do know, absolutely, is that gold and silver have to catch up with the currency supplies, and they will. This stuff always works out. It just takes time. So what do you think, Adam?
Yeah, I think a lot like you do, Mike. And I really like that analogy about having your boxing opponent there on the ropes. That's not the time to let up. That's the time to lean in. And I did note that economist John Adams said that 35 million troy ounces of silver have left the COMEX depository warehouses since the initial silver squeeze started. So, the point there is that physical supply is being drained from the COMEX vaults. This movement is working. Again, this is the time to really lean in.
Yeah. I've got one more thing to say here. A couple of weeks back, we introduced InstaVault, which is fractional ownership of the big that we buy the least expensive silver we can possibly buy. And then the price difference, if you look at the difference per ounce between Silver Eagles and this InstaVault silver, and, so you're getting real physical silver. You're just owning a fraction of a 1,000 ounce commodities exchange bar. If people buy stuff like that, here what we do is we're taking that out of commodities exchange vaults and putting it in non-commodities exchange vaults. And so it's being pulled off of the COMEX. You own it. It's allocated to you. And so by buying products like this, you're putting the squeeze in the COMEX. And that's what we want to do, is drain the COMEX. This is one way of buying 100 ounces at a time, or 10 ounces or 500 ounces, but you're actually taking bars of 1,000 ounce bars of silver out of the COMEX vaults and causing the squeeze against the paper shorts. Buying 100 ounce bars or eagles or rounds or something like that does contribute, because to make those, they've got to melt 1,000 ounce bars. And so that does take 1,000 ounce bars, but it's not as direct. It doesn't happen like right now. If this is an organized squeeze, you want to buy things where you're guaranteed that it's physical silver and that only you own it. And this is in a Brinks vault. It's not in your possession. If you want 100 ounce bars and stuff, that's a great way to contribute to the squeeze. but they're trying to get this to all happen in a very, very short time period to cause the shorts to have to cover. And when the shorts cover, the price explodes. So this could happen, but the best way to do it is to basically participate in 1,000-ounce bars that are being pulled out of the commodities exchanges.
Great. And Jeff, I'm sorry if there's one thing I could add to what Mike said, just on the price action. We've been watching the price of the precious metals, trickle down over the past couple of months. And over the past couple of weeks, it really seems like it has started to firm up. So I just wanted to, direct attention to folks here who've been asking, hey, when are the precious metals going to bottom? It's looking like they might have put in their bottom in the end of March. And since then, gold's up $100 an ounce and silver's up 10%. So, technically things are looking quite promising. And then of course, if we have people lean in to a squeeze like this, who knows what could happen. I also just want to note too, I saw today that Dan Tapiero, who's a very well-known hedge funder, he just was commenting that he sees silver well positioned to, quote, explode higher from here, especially if it gets above the $30 an ounce price. And again, who knows what's going to happen on May 1st, but buying pressure like that might be enough to ignite the price above $30, and then maybe Dan's prediction kicks in.
Yes, very good. I have to say, I really like that InstaVault program that you started there, Mike. It's awesome. It's a great way to buy ounces and at very low premiums. Then you can worry about conversion later. So, and it will be open on Saturday, May 1st, if you want to participate. Well, on a related note, guys, this is the tweet of the day, and it's from our friend James Anderson. And he includes a clip here of the new CFTC commissioner commenting on the silver market. And he says, James says here, the head of the CFTC on how the COMEX silver market had the, quote, market structure to, quote, tamp down what could have been a much worse situation in the silver market. And he actually, I watched the clip, and you can watch it if you want. He actually says there that we have the tools to control volatility and price. So I was quite amazed at him actually saying this. Mike, what was your reaction to this clip from the CFTC commissioner that James posted?
Well, first of all, I know James quite well. I hired him, and he became general manager of goldsilver.com years ago. His first job in this sector was with me. So James and I are good friends for a long time. But the interesting part, it says to tamp down what could have been a much worse situation in the silver market. And that relates to the last story of having them on the ropes. I mean, the silver squeeze movement, that really got very, very close to achieving its goal. So the Reddit crowd, the Wall Street silver crowd, they need to come back and do this again, because they're in a weakened position now. And this is rather exciting to see, actually. But to me, out of this whole thing and listening to him, to damp down what could have been a much worse situation in the silver market. Well, hopefully that, from his perspective, that much worse situation is going to come true shortly.
Hey, the only thing I'll add to what Mike said is, a fair amount of outrage too. In the video, he talks a lot about sort of taking pride in the transparency and the fairness of the current system. And there he is admitting to stepping in to tamp down, what's the natural price discovery that's been trying to happen in the market. So I hope Mike is right, and that those efforts are really just a sign of desperation when things start getting out of their hands. And who knows, hopefully maybe on May 1st, he's not able to tamp them down anymore.
Right, exactly. We'll see. It's pretty exciting, like you guys say. So, well, if you're liking this video, please hit that like button for us down below, and also hit the subscribe button. So on to chart of the day. And I actually have two charts for you guys. And these are basically Swiss exports or imports into other countries. And this first one is the Swiss exports into India. So it's India's imports of gold. And you can see this is through March now that it hit almost all-time highs, the amount of gold that was imported into India. So there's quite a rebound going on in there. And then the other chart is Swiss exports into the U.S. It's U.S. imports. And look at that. At the end of the year, they were the highest ever that we've ever seen in terms of the amount of gold bullion, physical metal coming from Switzerland into the U.S. So, Mike, what do you make of this?
It's amazing. And, I do think that a lot of people are getting prepared for something bad. In an upcoming video, we really should do something about showing just how overvalued the markets are because of all this Federal Reserve pumping. And you can pump things up just like blowing up a balloon, but if you keep on blowing, it's going to burst someday. And
Right.
that's what's going to happen with the markets. And so I believe that there's a lot of people and some very wealthy people starting to get prepared for what I am absolutely certain is coming. What's your take on it, Adam?
Well, it's exactly the same, Mike. As you know, over at Wealthion, that's sort of my day job as I talk to money managers, investors, et cetera, who are, managing large amounts of money and trying to figure out what to do with it. And the folks that I talk to who are more of the independent people are confirming exactly what you've said, where, in the industry, everybody running a big fund is, beating their chests about the story stocks that they're holding in those funds, the Teslas, the stocks that get a lot of headline attention. But this is a classic example of don't look at what they say, look at what they do. They don't talk up a big game about gold, but they're out there actually buying it for the reasons that you mentioned. So, the folks that I talk to are much more forthright about saying, hey, this market is so overvalued. The really responsible money manager really needs to be moving to liquidity and being positioned to, step out of the path of becoming deflationary drop in the markets and then reposition their assets at better valuations going forward. But when asked what to hold now, one of the very few sort of universal answers I'm getting from the independent folks, at least, is get yourself some gold. And I think this data here is supportive of that.
Yeah.
Yes. Very good. Well, on to some viewer feedback. And this first one is from VK Travelog. And they say, I counted about 21 container ships off the coast on Sunday. We believe this is referring to the Los Angeles area. So, and this other one is from Dolly Martin. The cost for 40-foot containers was $6,000 this time last year. It went to $7,500 by the end of 2020. And now shippers are bidding up the price and putting surcharges of over $5,000 on them. You can expect to pay $12,500 for a 40-foot container to get a spot on the vessel. So these two tweets are obviously, this viewer feedback, I should say, is referring to not just the amount of container ships that are flooding the area, but also the cost of those container ships. So, Mike, what's your reaction to this kind of trend that's underway?
Well, prices are a function of velocity times quantity. And we've seen an increase in the quantity of currency that, it's very similar to what the Weimar Republic was doing and Zimbabwe and Venezuela. And we've done this in the Western countries, but velocity was slowing during this time period because of the pandemic, because of a lot of uncertainty and anxiety. And as that anxiety gets lifted and that currency comes out of hiding, and that is what's happening now. There's high demand for consumer goods. And all of the, one of the things that we talked about, Jeff, in our last video was all the ships that were offshore waiting to unload in Los Angeles, but also the shipping rates coming from Asia to the United States versus going back. It was only like $620 or something to buy a container going back to Asia because they're all empty. They're just desperate to try and fill them. And so it's very interesting. We print all of this stimulus currency, diluting the currency supply and basically creating a tax on all of us. And then that stimulus ends up going to China. So the government is actually helping China more than it's helping the United States. Ultimately, I mean, that's where it ends up. What's your take, Adam?
So on top of what you said, Mike, I would add also, this is definitely, a surfeit of stimulus, right? This is just way too much new currency out there in the markets trying to find a home. But it also is supply and demand. When I interviewed Steen Jacobson a few months ago, he talked about how the digital economy has become so successful that it is now running into constraints in the physical world, that our physical infrastructure isn't large enough to keep up with the growing demand that the real products that are being sold by a lot of the e-commerce platforms and whatnot are selling. And the reason why I want to hammer home on this is because I think our shipping fleets are a great example of this. We are having these traffic jams, we are having these backups, we are having this lack of containers that are driving these prices through the roof. And I think this underscores a point that you and I and Jeff make pretty regularly on this program, which is we are entering into a future where too much currency is going to be increasingly competing for too few real things. And I think it's a very fundamental underlying reason why owning physical bullion makes so much sense going forward, because there only is a finite amount out there. There's only a finite amount they can take out of the ground each year. But the currency supply is increasing at such a much greater rate that at some point, like you said earlier in this video, Mike, there's going to have to be a price true up. And that's going to be, at this point, I think, pretty extreme.
Yeah. What I find is interesting, too, is when a top spins at first, it's very, very stable. And then it makes a little wobble. And then it starts another wobble, and then it goes into precession. It gets bigger and bigger and bigger, and it tips over. I really do, in my book, I said there would be the threat of deflation followed by an overreaction by the Federal Reserve, which would cause a threat of deflation, which would cause a reflation from their reaction, and then real deflation, and then potentially either big inflation or hyperinflation after that. But it's looking like it's going to be this like up and down zigzag. Markets crash, banks stop lending, the Fed overreacts and pumps the markets. And we're seeing just this bizarre, but eventually it's all quantity times velocity is what's going to determine the prices.
And to that point, Mike, sorry to interrupt, but these shipping fleets parked offshore are a great visualization of the velocity you're talking about, the volatility you're talking about, because we saw the exact same pictures a year ago of fleets of tankers that were parked empty because there wasn't demand at that point. Nobody was sending things back and forth from countries because we were in this deflationary period, a year ago when the world basically stopped due to the coronavirus. Now we're seeing the exact same pictures of parking lots of ships trying to get into a port in a traffic jam. And it's so interesting that both visuals are nearly identical, but they are examples of opposite polar ends of this wobbling.
Supply demand, the supply demand extremes, right?
Yeah. Well,
good observation, Adam.
Yeah, good input, guys. Let's see if we can sneak in some more viewer feedback real quick. Mike, I think you'll have a comment on this. This is from Eric Andre Hegna, if I'm saying it right, Eric. Hey, Mike, great content as always. Is it possible to make another video about market cycles? I really love that last one. I want to understand deeper how the market cycles and risk gains correspond.
Well, to address the last portion of that statement, your risk is the least when you're buying something that's severely undervalued. It's when you buy into something that's already had a huge run that you're also buying a lot of risk. But to understand this, you can look at my Wealth Cycles video. We'll put a link up to that. So for anybody that hasn't seen that, where you're comparing different asset classes and you divide one asset into another asset and you're eliminating the currency. If you want to know how many barrels of oil your house is worth or how many ounces of gold the Dow Jones Industrial Average is worth, then you're getting a true picture of what value is, not price, because price means nothing. Value is everything. That was a whole chapter in my book. And I'm going to be doing a lot more on it. I don't have anything for publication right away, but there will be a whole lot more because I've taken a lot deeper dive into this subject. And I've gone back about to the year 1900, basically. And what you see is pretty much everything. If you're measuring one thing against another and you eliminate currency, with currency, that thing is constantly going up in price. It never stops. But when you measure your house in barrels of oil or ounces of gold or whatever, shares of the Dow, how many shares of the Dow does it take to buy your house? What you discover is that everything goes up and down in this valuation channel, I call it, and the other asset is doing a mirror image, the exact opposite wave. And this is a great way of determining what is the most undervalued asset, and that will be coming out later. But for anybody that hasn't seen it, watch my video on wealth cycles. We'll put a link down below this video.
Good. Adam, any quick comment on market cycles?
Just in this case, just reiterating, Mike, I think it's a great video. Go watch it. But again, my day job is talking to people that are trying to invest in this environment. And I will tell you, it is becoming almost unanimous to these independent investors that I talk to that this is a time for battening down the hatches. They see the risk of a potential market correction as being unacceptably high at this point in time. I guess that's all I can really add here.
Yeah, good point. Well, Mike, one more comment I want to read to you from a reader, the spiritual douchebag he calls himself. Mike, I just want you to know I have been watching you for years. You have given me a true education. You have changed my life for the better, forever and for free. I have no debts, and I am watching my investments grow. I just got my first Porsche, a dream I've had for many years, and it's largely thanks to the concepts you teach in your financial philosophy. When I buy gold or silver, your site is always the first place I check. Thank you, sir, from the bottom of my heart. That's got to make you feel pretty good, huh, Mike?
Yes, it does, and I want to thank the douchebag for that. This is wonderful, and that's the reason I started goldsilver.com was to support all of the education. I wanted to do things like Hidden Secrets of Money and so on. Congratulations on the Porsche, and keep it up. This is very rewarding to see.
Yes. And I think a lot more people are going to have that kind of experience in what we think is ahead, huh? So, well, on to our meme of the day. And before I read that, though, or before Mike reads that, just real quick, you can get his book for free. The link is below if you've not read it. And also sign up for Adam's new Wealthy On channel. Some very exciting stuff coming on there. And the link for that is also just below. So, Mike, what's our meme of the day here?
It's currency wars. Are we winning? And it's hilarious because we're throwing gold at China and China is throwing our own dollars back at us. And that's really exactly what's happening. We showed one of the charts of the day was the buying in India, the exports from Switzerland to India. And China is currently one of the largest buyers in the world, and they're also the largest producer in the world. So not only are they keeping all of their own gold, they're bringing in more of it. They're very long-term thinkers, and so they're getting ready for the end game of all of this. And the end game isn't holding a lot of dollars. So I want to thank everybody for watching. We'll see you next time. Thank you, Jeff. Thank you, Adam.
Take care, guys.
See you next week, guys.